Good afternoon, traders. Welcome to Trade Setup in the live stream we've got the 13th of December. So another day closer to Christmas. So things are getting busy, I'm assuming, for most people, if you're like me. Trying to avoid shopping late hours, but it's got to be done. So we're, a few more days. So we've got about a week and a half till Christmas. So we're looking good. Markets, it's still continuing its way high. A bit of a down night last night. So we'll go over that. We'll go over that in just a minute. And the topic for the day, what we're going to take a look at today is what is a short squeeze and how to profit from a short squeeze and how to recognize a short squeeze when it potentially could play out. We'll go over that, and it's not only short squeeze, it's a long squeeze as well, um, or washouts, what we call them a lot of. So we'll go through a bit of that today. So any questions on that, yeah, feel free to whack it into chat. Um, or you can send through if you've got an example on a chart that you may want to send through that you've a recent trade or anything, just send it through to support at tradesetup.com.au and then we'll get that up. I'll just make a note in chat also that you sent one through. Just the usual housekeeping. We've got on the screen there, you can see our the Trade Setup site. You can follow us on at trade_setup at Twitter. You can go to Facebook and you can just search for Trade Setup and befriend us there, or just link into YouTube. Subscribe to our channel at tradesetup.au. You can see it down here anyway. Subscribe there and you'll get notified anytime we go live if you don't get it through the app, but it all should be good. We've also got our general advice warning on there. We just want to take a bit of time just to quickly read through that. Like we say every day, is that we're not giving specific advice and we're not taking into account anyone's personal circumstances. What we're actually talking about is just our own views and opinions, and discussing different areas in the way we look at markets. So for anyone new, take a bit of time just to look at that. Otherwise, we'll get into it then. Let's get into the market and just take a look at where we're at the moment. So how are we going today? Anyone going to be pretty flat at the moment. It was down about 5, 6, 7 points, I think. Let's just take a look at the intraday action. And now we're showing up 5. So I think there's going to be a lot of nothing just while. I think tonight, what have we got tonight in the US is I think it's the Fed Reserve meeting, and they'll announce interest rates, and they've got the meeting minutes. So anyone that's been following that may have exposure. Obviously, we all have to the US. Just if you can, just follow what they're going to actually say. If you can see, you follow the news and see what's coming out in the meeting minutes and what they're talking about and where they're sort of seeing interest rates for next year. I think about this time last year when they raised rates, they were talking about maybe 3 or 4 interest rate rises for 2016, and that didn't play out, obviously. So if they're going to reiterate that again and saying that inflationary pressures are really increased from last year, maybe, or they're starting to put pressure, so we've raised rates once, and they're looking for another few, maybe into 2017, and we should see a bit of action in the markets because they're going to be more focused on that than the actual rate rise itself. Rate rise has been well and truly factored in, so just keep an idea. If you get a Bloomberg stream, you can get Bloomberg onto your phone. It just pops up with different things. So it's bound to be something come through on that, or just go to if you jump on the computer, just go through to Bloomberg or Reuters or something just to see the headlines, what's coming out. The market, you can see you've got a bit of a resistance zone just above 55.70 now. We just sort of opened a bit lower, a bit weaker, and just worked our way higher. So we'll see if that can continue in the close. I would expect, like I said, I wouldn't expect a lot to happen today, any major action. The trend is still higher on a longer term basis. If you look over the 30-minute chart, we'll go to actually, let's just kick it over. Actually, let's go to the CFD. It's pretty much the same thing there. So we've got ASX 200 when it decides to load. This is a 30-minute chart there. So you can see that, and the key level is around that 55.40. So it's probably one thing. It's probably touching on what we're going to talk about today. A bit of a washout of the lows. This one here was pretty much a long washout. Sorry, washing out the shorts. I say a bit of a short, not a short squeeze, but just washing out some of those short positions. Stop them in and then whip around and turn around and straight back up again, up to 55.68. So not too bad at the moment. I mean, that there on a half an hour chart looks quite good. Is that the actual open? Yeah, that's the open there. So it's not looking too bad. we expected this type of action. You always expect if you're down near a support level and the market's quite positive, you expect them to wash it out on the open. Quite a lot they'll do that, and because this is linked up to the futures, obviously, you expect that bit of a washout there, and then that support to hold. If it's a positive market like we're seeing, that support's holding at the moment. We may just teeter up here at 55.68, may back off during the day. Be interesting to see because obviously the rate's out tonight, the announcement. Let's look down at a 5-minute chart, see if we can see anything better. Does anyone trade the ASX a bit? I know a few here do. Has anyone got something on there? There hasn't been. Yeah, actually, this could probably a bit later on. This might lead us into what we're talking about today, and we might come back to this candle, the specific candle just here. All right, so you can see that market's obviously a bit of a washout of the overnight lows, and it does it time and time again. Whether it's the highs or the lows, we'll wash them out if they're close. Bit of a washout. It may get some fresh sellers in there, and then just turn around and stop them out. It's just a bit of fuel for the fire, really. For that, the market's going to sort of head higher. A lot of the time, they do wash out the low. Just clean the market out a bit, and then get people on the sidelines ready to go back in. And it's just that fuel for a move higher, which probably could have been through. Maybe if you're intraday trading through the 51, 55, 52 zone, thereabouts, your stops could have been down here, and you've got a nice little ride up to the resistance there. So we'll see how that plays out for the rest of the day. It may just be hanging around this level. It may continue higher, but I'm expecting more of a bit of a retracement of that move higher. Let's look at the Aussie. Just drill down there, but this is the 30-minute chart also. We can see that higher lows are holding. Just get rid of that. The market's pushed up into that zone up at the 74, 7,500. We've been talking about that for a while. It did push up, so it held a higher low. It did push back up into it, so it was looking good. Just really that washed out that zone. So sometimes that can be a precursor to a move through. They just wash it out and pull back, and then you get fresh shorts entering, and then obviously another higher low is built, and that's pushing us back up to this zone. So I'm expecting this leg to continue a bit higher, even push up to maybe 75.25 and above, but just a bit more of a stronger move higher or a stronger move through that resistance zone there. But we'll see how that plays out. See, it's touched up in there a couple of times now. Let's just see if that longer term, if this does hold, just washes out and we start building, we want to see a more major lower high, and then you're going to start having to attack these levels. Start attacking these and washing these out, then you might see that market roll over longer term. But at the moment, it's looking more conducive to actually a continuation higher, push higher. But we'll see how that plays out. Let's get into it then. Now, let's go back to that 5-minute chart. So what we want to discuss is, this is pretty much a flow on from yesterday's discussion topic on short selling. We want to talk about it's not just short squeezes; they're more common, obviously, in the ASX as well, and squeeze plays in general, whether it's a short squeeze or a long squeeze. So what we're talking about is when you get a number of positions built up in one direction. If a number of positions, the momentum, we might be contracting lower, and you're getting people stepping in and shorting the market, and then eventually you get a fair few shorts built up. And then what we'd be looking for, then when you can sort of see it, we'll go through it a bit in a minute. The idea is if there's a few short positions build up, so there's some major lower highs building, pushing the market lower, whether it's longer term contraction, it doesn't really matter. As long as there's a few there, you can see the price structure starting to build on the downside, and then the market will sort of pause. It may consolidate. Maybe it looks like it's going to roll over again, and then it just squeezes them out. So it just knows that the market, if it's going to continue that longer term trend high, that happens quite often. And we were discussing one yesterday, which we'll take a look at in a minute. Maya, I think Maya probably a bit of a short squeeze played out yesterday. So we'll go over that in a minute. And it can happen on the long side as well. The market can pop up. The market's been quite strong. It can pop up, just take out a level. A lot of people might get stopped in when you get continuation trades. Whatever the sort of bias or whatever the methodology is, people get into the market. It can, especially when it's near a key level, it can wash the people into a trade, and then what will happen at turn around, it just squeezes them, and then they've got stops obviously somewhere if the market turns around, and then will eventually just squeeze them out and move down. There's a few obviously key differences we look for. whether it's if the market, the overall trend is higher, which we determine from our MAs. All right, so we get a 20 and a 50 MA in this. Probably not the best examples. We'll go over Maya in a second. We like to see the MAs if it's going up and the market's pulled back, and it could just wash out some traders on the downside or squeeze them out and then continue its trend higher, or the vice versa on the short side. Obviously, also when we look at Maya, you'll see it's a bit of a different price action. We want to see just to be able to determine what a short squeeze is and when it could play out, or whether it's a washout. I guess what I'm trying to say there is a short squeeze is more of a major move. A washout, or what we'd say is a minor short squeeze as well, or on the other side, the flip side, a buy squeeze or a washout is when the market, it could just be turning, it could continuation lower, so it washes out the top side, then heads lower again, or vice versa, or it's the start of a new leg. So we want to be able to determine what is a potential likelihood. So are we just looking for a washout where the market may be trending lower or trending higher? It's just in a bit of a pullback. It might wash out a support zone and then pop back up again. So that's continuation. Or if the market's, it could potentially be the start of a new leg. So I think there's more major structure that comes into play in that respect. You've got to take note of the major structure and what's happening in context, what this minor time frame might be doing. If you just kick it over to Maya as an example, what's the minor, what is, so this, for example, if we just go over this rather than jabbering on, you can see the market, it's made a high. Let's actually go to get a bigger context over here. This is just the other platform here. You can see on a weekly basis, we've got the other chart on NinjaTrader as a daily, but we'll hone into the daily chart. On a longer term basis, this market's heading lower. This is a weekly yep. So you've had a good leg down here, down to that $1.50 mark, say $1.50, turn around and headed back up. And you can even see just at this stage, it's more of a washout. So the overall longer term trend down, and even if you click down to the monthly, that monthly's heading lower. This is really just a continuation zone. So it's had a bit of a pullback. You can see the market's getting a bit extended up there. And what they will do time and time again, just as is a great little example. So the trend is down. People may, for whatever reason, they might be buying on entry here. Risk could be below here. They get stopped into the trade. They're currently long, and then they get washed straight back out again. So that can happen time and time again. It's not as clear on this weekly. It's probably more of a monthly move. But it happens time and time again when you go with trend. It just stops people into the market, and it just gives fuel for that move down. So when the market rolls over, all those people that got stopped in a bit late, so these people are a bit late to that party on this move up at least. If you're going to enter long, you probably want more ideally enter when the market's on the downside, as is coming off a base. You can see that move down. It's made a higher low, maybe entering long in here, even long in here, and you've got I know it's in hindsight, but you've got that move higher. If you're entering long here, people that are late to the party will get washed out time and time again. And you see this type of price action a lot, and that's in context of this overall move down. You've had a good move up. We've spoken about this before. So you tend to get a lot in futures markets. You tend to get a lot in foreign exchange markets. Some of the more active markets, it's not as common in stocks, but it can happen. And it can happen, well, look, it can happen in stocks easily, especially on the downside too, when the markets are not looking too positive. They tend to wash people out, and people get a bit excited, like jumping in here, thinking it's going back up to it's looking good, up to 370, a good strong move up there, and all of a sudden they're washed back out. And if they're, I guess in my opinion, they can just buy and hold if they want. If they bought it up here, they're not looking too good at the moment, down at $1.30 if they're buying it around $2.90. If you're trading correctly, really, and you're placing your stops, you're analyzing your risk correctly from a technical basis, you'd probably want to have your stops down here, and then you've just been washed out. So that's just adding fuel. The market's going to roll over, it just adds that fuel. So you might get fresh selling, people who are boarded in here, who are holding and seeing this type of move and go, okay, it's coming back, and then you get this washout here. They might just be going, okay, I've had enough. I've seen it push the way down. I've tried to hold it. It looks like it's heading south again. Let's just get out. So you got the people who are stopped in long, and maybe fresh people who are holding old long positions, just wanting to get out. They've had enough of that, and then you see this major lower high in here, and it's pushed the market lower. So that's pretty much a bit of a washout here, building that lower high, and then you get that secondary leg down. So what we're seeing at the moment, if we go back to the daily on Maya, just remembering in context, this market's heading south on the weekly and a monthly basis. You've got that stronger leg down. We're just starting to bounce off. We're building some higher lows. But this type of price action, if we just push it back out a bit, is not conducive to strength, in my opinion. And it has been popping higher. But what we're looking at is we've just got it, and it's just happened as of yesterday, really. I don't know where's mine today. Where's the daily? Well, it's opened a bit lower, but it's back to where, roughly where it closed, around that $1.30 mark from yesterday. This type of price structure it's not looking too strong. When you want to see something, you want to see it have a good retest of a level. Maybe if we just go to it. Sorry, I don't know what happened there. It's not the right button. F2. Here we go. So you want to maybe see it pull back and just retest some of these support zones, and then you want to see a high low off it. Something like this off a retest, but when they just push up, pull back, make a higher low, it's not showing a lot of strength to me, and you can see probably why people have. You've got that push down. Maybe this is pulling back, and they're saying, okay, the overall context of the market is lower. You got that monthly move lower, the weekly move lower. We had a leg lower, we contracted back up. We may be building a lower high in here compared to this, the high just up here, if that makes sense. Pull it up a bit, draw that a little bit nicer. So you're sort of expecting maybe price, especially after the breakthrough here. Okay, you've got that push down. It's potentially broken that uptrend. When it's pushed down here. It's had a good bounce back up, and they're looking, okay, this could be a good zone to short it if you look back a couple of days. What's happened? You get that 5 or 6 or 7 days of just people starting to jump in. Look where it's overbought through here as well. It's got a bit stretched. The market's pulled back slightly. It's only really had a day candle, and then bang, you've got that short squeeze through the top. So that's what we're looking at. This now, if we go back to that overall major, so before we continue, is there any questions? Just what I'm trying to explain there. So we're always trying to take it in context to what the overall price structure is, and this overall price is quite clearly negative. Trying to pick out a key level, probably a key level for me, and what I'm seeing for the longer term price structure to change is it's potentially right up here at $1.80. So really, we've had that leg down here. We've contracted higher. We're looking to roll over. So probably not a bad position. Ideally, I didn't see any setup for me, what I'd like to see. And that we were talking about that yesterday as a potential short squeeze. I think Devin and I were just chatting about that prior to coming on yesterday for the stream. And that's just squeezed them out. So you've got people that are short in here, and they've probably got to stop just up here to buy it back at 132, 33 mark. May have just been squeezed out yesterday, and this price action could take us up to retest that resistance at $1.45. You don't know. Who knows what's going to happen from here, but in context to here, this trend down is not over until we really break up at 177. So it comes down to your anchors like we've spoken about before. Okay, Paul, what we're in context, there's an uptrend from here. All right, so you're right, you're in context of this, but if we're to a daily basis, if we just pull it back to here, okay, that's a clear uptrend. There's no arguing there. We've got higher highs, higher lows, but what we're discussing is more the weekly basis. On a weekly basis, we're not talking about this little leg here. So on a weekly basis, we'll go back to this chart here. On a weekly or even monthly, that's a clear downtrend. The leg is way up here. The current anchor to the downtrend is at $3. All right, previously, it was probably somewhere up at, even if we get a monthly. Well, that's all the data anyway. The market's open, it's retested the highs, and it's just headed south since then. It's come back up. If this was a strong market in here, we should have seen a high low build, take out that $3 level, and push back up to the highs. We didn't. We saw a lower high build. So this is a key for this current leg down. And really, what we're talking about in context of the weekly market is this is just contraction, maybe high. It could be heading south. It could be the start of a trend higher. We don't know, but the downtrend hasn't broken on a weekly basis until we get up to about that $1.80 mark. Does that make sense there? This, yes, I mean, you could say that, but then you've got to be wary that you're probably going to get a bit of reaction. Obviously, you're going to get some reaction off $1.45. This may have just washed out traders, and it could roll over from here and retest the lows. For me, for a weekly trend, if I'm this is obviously we're talking about the weekly chart. That's our basis chart or our anchor chart. What I'd like to see is more of a major turning point. This could easily just roll over from here. If we see that break up, say wash out $1.80, even push up through $1.80, $1.90, and then roll over and build a higher low, then I'm assuming that longer term, the daily's up, the weekly's turned and it's heading up. Might start taking out, bringing in a few buyers. But yeah, I guess you are right with reference to a daily chart. This trend is higher, but that's still in context to this leg down. All right, and that's the leg down still got, you got a bit of resistance. It's blown out that resistance. You've come up to, oopsie daisy. If you can see that there, it's a bit of a resistance zone. It's just touched up on here. So there's a lot of reasons why you probably could have shorted it here too. It's just touched up at resistance. You've had that big sell-off. It has bounced back hard, and people are looking for it to start rolling over. You know, another leg lower from potentially here, heading south, maybe down to, who knows, 70, 60 cents, 50 cents even, as a short trader, and they've just been washed out. Does that make a bit of sense there? So it's always, we're talking in context to it. Like we've spoken about before, you've always got to have a reference chart. At the moment, the reference chart's the weekly trend's down. Daily trend is really just contracting higher. This is not a clear uptrend at the moment. It's more contractive action. You want to see, I probably can't get it. Anyway, I'll try and find something that might be a bit clearer. I'm just going through a few charts. Anyway, yeah, and you probably find that's why we're seeing the squeeze on it too. That's could be the case. You get a bit of a flush out here. This might be the correction we look at, but like I was saying, on a weekly basis, that trend is not broken. I mean, anything could happen from here. Sales could be good. You get through Christmas. We're sitting up sort of towards here, $1.45, and then could roll over from there. It could still be a short, but it needs for me just on a weekly basis to push up through $1.77. We could be finding support if we just get rid of a bit of. Yeah, it's a bit of a zone through there, but there's a bit of a support zone through here. It may have just bounced off here. If we can drill it down now, if we see slightly different price action, yeah, at the moment I wouldn't. I'm that as well. I wouldn't go long. I wouldn't go short in here. For a setup, if I was going to go short, say if you can take out the last few candles, let's just draw it up. So that's our resistance zone in here. The market's pushed up into it. Just delete that and try again. The market's pushed up, and that's pullback. That's with that red candle we've got down to that low just in here. What I would like to see is that lower high, and that's just evidence, and that's what you'd ideally be looking for a short trade. It didn't play out at all. I mean, you needed to see this market roll over, build that lower high, and then that, in context of the overall trend, is a lower high compared to that 145 zone just in here. That didn't play out at all. So it's just a great example of a little washout. You got a lot of shorts build up, longer term on a weekly basis, the market's heading south. Maybe it's it could just be, if we can draw that up again, it could just be, it's pushed up, pulled back, it's popped up here. You may still get that sort of minor head and shoulders, you don't know, or, we've washed out the top side like here, we start pulling back, build a higher low, and then we go. All right, and it could just be start of a new trend. You don't know, and that's the whole point. For me, I wouldn't be going long in here, and I wouldn't go short, because for me to go long, I'd rather see that weekly trend just be. I mean, it's miles away at the moment. You could trade that up to, I mean, you could have gone broken, bit of a breakout trade, go long in here for a push up to $1.45, but your risk has got to be below here. I mean, you wouldn't be putting your risk way down here at 98. Does that make sense there anyway? So I guess it all comes down to what's your reference chart, what's your reference time frame, and what are you looking for as a setup? Does that make sense there? But in reference to what we're talking about with washouts and a short squeeze, that's a great example of a short squeeze. If we can find, let me just check to see if we've got a couple more examples. There's nothing here too much that I can see. MTS. What, I guess another way to view, let's just draw it up. Ideally, let's just get rid of all this. Ideally, what we'd be looking for, the difference, let me just try and draw it up. Let me just get my head around what I'm trying to do. If the market's heading down, okay, we've got major, this could be on your weekly basis. It could be even on a daily basis. You've got a lower highs building, lower lows, okay? And then ideally what you'd like to see is that higher low build, or just this type at this point. All right, there's no rhyme or reason. This is, to me, where a bit where Maya is at the moment. It's heading south on a weekly basis. We've got that major, a key resistance area, if we could just, a key anchor level, which we've discussed before, holding that current leg down, and that current leg is here. We're looking for maybe a zone where it could happen again, and you're looking for potentially the market to head south. So you're in roughly that zone, 1/3 to 2/3 of this move down. So this is a leg we're trying to concentrate on. It's bouncing back, it's contracting back up. So you're looking for 1/3 of it, which is roughly in that zone there. You're potentially looking for, if the shorts are going to step in, they're going to get suckered in around here. All right. But the only problem with this, and this is where you've got to take context, the overall what's happened in the past, not just a couple of days, but what's on the time frame charts. Now, if you looked at, this, if you can imagine just this, and that's your chart, that's what you're seeing on your daily chart. The move up, pull back, okay, that can look like it's going higher. But in context of this, the market's heading south. So what you'll find, if people just continue, you've got the MAs might be heading down. Whereas the MAs on the weekly basis, just go back to Maya and just see where they are. Didn't really take too much notice. See, they're starting to contract in. So you can see they've contracted in a major rollover. So in context of the monthly chart, okay, they're heading south. So what we're trying to do is just go down the charts, obviously refining the entries. So in context of what's happening here, the market's heading south. But the problem is, it's had 1, 2, 3 legs down. So the probability of a fourth leg down, the more legs, this is the way I view it. And this is where you can get a nice setup rather than just what we say is a washout, which we talk about in just a second. This is more, could be a good area where you've got enough shorts built up. Not just shorts have started building up here. You've had a pullback, maybe a few more shorts, or you're just getting people that are just getting sick of holding some longs. They might be underwater. They might have bought it in here, looking for this bounce back up, bought it again, and they're just getting sick of it. So they're looking for a reason to get out, and they might have just been selling it. Okay, so you're getting this kind of contractive action. All right, so what it's really setting up for, you built another little higher low, and what you're looking for is that pop out to that top side there. And that's where you'll get a nice little squeeze, and it could be the start of a new leg higher. All right, and then once it's got to attack that anchor for a new leg high. But the difference is you can use that potential for a short squeeze because you know exactly where your risk is going to be. If we can draw that up, if we can just draw, if you had a pop through that, if that makes sense, you can see that just taking out that little minor lower high, and it's holding higher lows. So you're getting that contraction just here. All right, it's popped out to the top, so you know there's a lot of shorts that are built up here. They're going to have to buy back. Anyone that's been shorting the market, whether it's shortable, obviously, been shorting into it, and you get that short squeeze. So buyers will start stepping in. Anyone who's short that wants to get out will be starting to step in to buy it back, and then you get that pop to the top side. And that potentially could be the start of a new leg higher because of 1, 2, 3. All right, so there's a lot of shorts sort of built up there. They're going to start getting squeezed out, especially when you pop up, and that's really your first signal that the higher lows are holding, and we're going to start washing it, at least attacking these lower highs. One in here, you built another high low, you push up through that one, and there's your key level on your weekly basis. As soon as we start getting up, even if you wash that out, pull back, build another high low, and then go, you're going to get an accelerated move higher, and that is more conducive to a start of a trend higher rather than price action that has been heading higher. All right. So what we're seeing here is, if we can see it, similar type of price action in this zone as it is in this zone. All right, similar type of price action, a few minor higher lows. You're getting the market contracting a bit. Okay, but the difference is this market's been heading south, so there's been a lot of shorts built up, whereas it hasn't here. So this is more of a continuation. It's not really going to be it could be a short squeeze because considered a short squeeze, but I don't really consider that a short squeeze. But because context to what's happening, it's really just a continuation pattern. All right, and then we're looking for that breakout, similar type of price action, and then attack the highs and get that really accelerated move through the high there. Does that make sense? Just that different style of, you've got to remember where the markets come from. So people here are entering short, they're expecting this continuation lower, a continuation trade, and they're getting squeezed out. And there's a lot of fuel built up. Whereas here, there's not really any fuel built up for a short. It's not really a short squeeze, just a continuation trade. So people are just looking to buy in here, continue the market higher. Does that make sense there? I hope. All right, so what we'll quickly talk about is a washout. All right, say maybe the difference between, if we take into account, we're just looking at it, let's just go draw it up again. So what I would consider, and washouts happen a lot actually happen in pretty much all markets. You see it in stocks too. If you've got a key level, just say the market's been heading higher, right? And what we're looking for, if that's going to make sense, maybe I'll draw it up a bit bigger. Sorry about this, guys. So we've got the market, the leg up, contraction, 1/3 to 2/3 of this leg up, market's continued higher. All right, you've had that pullback, and then what you get, so at this stage here, you're really just looking for a continuation trade. All right, so 1/3 to 2/3 of this leg up, you've got your continuation trade in here. However, the setup, when you drop down, this could be a weekly. This is your anchor chart, potentially on a weekly, and you're looking to the daily for an entry setup. And we all know the entry setup, if it's pulled, well, not that one anyway. For me, that leg lower on a daily basis, we've had this leg lower. I'm looking for a major little high low. I've got my entry, and that's in this zone here. So this type of entry here could play out just here. We're looking for the same type of thing to play out here. And so after one leg up, you've had your second leg up, you don't know what's going to happen. So there could be people that are waiting to short this trade for whatever reason. I don't know. They might have held some stock for a long time. They're just looking, they think this is overextended. The fundamentals, okay, it's a bit overpriced for whatever reason. They're looking for that lower high to build. Just stretch that up a bit. And what you can get a lot of the times, so you've got pretty much, just think of it as going to be a bit of a battle between shorts and longs. At this stage, we don't know which way it's going. As it can continue higher, it could just roll over. And what this type of price action is fantastic, all right, for a short. It could look at it and go, okay, we're going to get short. just at this stage, if we just draw up a couple of things here. So you've got a key sort of support zone there, but don't forget, we're still in context of this. There's no way this is the anchor for that move higher, all right? So until we break that anchor, everything to me is considered contraction. Does that make sense? So we're talking about this leg up here, all right? So this could just muck around in this zone. It hasn't broken through this 190, support zone through here. So to me, anything could happen. The market on a weekly basis, the trend is still higher. It doesn't matter what happens until that's broken. Then you start. For me, technically, that trend has to be, that 190 has to be broken before you'd expect maybe some consolidation, even a longer term contraction. But in context of this leg higher, at this stage, we don't know what's going to happen. So this market could easily suck in a few shorts, pop through that major level, just wash it out, and then you start to see it lifting off that level. Okay, so that's what we would call a washout, just if you can think, just in this little tiny zone in here. Does that make sense to you guys? Just draw it a bit. So this little, doesn't want to draw it for me for a reason. Right, did it work? All right, doesn't matter. So this little zone just in here, breakthrough there. Something's not working. My pen's decided not to work. All right, I've got a little error. Just 1 second there, guys. I think getting a feel it's just crashed on me. Anyway, while I'm fixing this up, does that make sense from what we're seeing there? It did for a washout. So we're looking for, did that work? Oh, here we go. So we're looking for continuation, and a lot of the times they can wash out a support. The short traders, because of this lower highs, they're starting to get active through potentially here, and that's more front running a good support zone. It washes it out. You've got a few short traders in, and it just reverses on them. And all these people who may have built up a short position in here and here, or are viewing that and they've sold out of their position, with respect to this, think it's going to roll over, are getting caught. And then you've got a nice little entry through here. Once you get the washout, you can potentially get that entry back up through and get a continuation trade even on a break of that little high. Does that make sense through there? So that's the difference between the momentum's higher. Okay, we're looking for this leg to contract, and it has. We're looking for a contraction zone, and a lot of the times you wash out the lows and then it continues higher. And that's not what we call a squeeze. That's more of just a washout, and it does it on the top side. If you get so the market's heading lower, you get that little washout and then head south. So you washed out the highs through here. And this is where you might get people just in exact reverse of this going, oh, look, it's a great buying opportunity. It's going to pop through that high. I've got my risk through here. And all of a sudden they've been put into a bought on stop. This leg down hasn't broken until you get up through that anchor level. And then it rolls over from there, just wash it out and brings in some buyers and then just takes them back out again. That's just fuel. Once you get through here, they get stopped out, which is a sell. And that's just fuel for a move down. All right, so I guess it's all what you've got to take note for anything that could be a washout or a short squeeze. It's all got to do with the context of what's happened in the past, the past market or the past price action. Now we can go back to our Maya chart, and that's what I really do see. This is just a bit of a washout. So sorry, not a washout. This is more conducive of a short squeeze, and we saw it again. Remember on the ASX, we saw we were discussing that for quite a while. Let me just get the ASX up. This is probably a really good example. We've discussed this quite a few times. Let me just get a bit more data in there. This to me was a great little example of a short squeeze. All right, so That's our XJO. We've got, take that. All right, so you've got, that trend was high, but the thing was with this, and why we viewed it as a short squeeze, is that that market was heading south. Does that make sense? As a long, on potentially on Maya. We're talking just on the XJO at the moment there, Michael. Sorry, I know there's a bit of delay there. Just up in there. Okay, I'll just keep an eye on the chat there. My drawings. Yeah, like we were saying, I think we were discussing before. I think you were saying a bit long or short. I don't see Maya as being a long at the moment. I'll just go back to it. All I'm saying is the context to the weekly chart. That weekly's down, that's contraction higher. You may have got people looking for a rollover again, but that longer term downtrend on the weekly basis hasn't broken. And this could just be a squeeze, hold below that high and then roll over. I don't know what's going to happen. I don't like it. It's just a great example of a bit of a short squeeze. Nice little area potentially for people to, shorts are building up. You had that big push up, people expecting it to roll over, starting to sell, and then it just squeezes them back out again. Whether it's going to continue higher and attack this 145 zone, who knows? But for me, there's no setup for me. It's just a great little short squeeze, a good example of a short squeeze. To me, you know, if I was going to take a punt on either side, because where it is on the downside, I'd be looking for longs, but I still need to see some price action play out. Does that make sense? If we go back to that, right, yeah, that's a good pull. It's actually at a good level. I mean, it's had a couple of good strong legs down, so it's not, you know, in as a zone, as an area. I know you look at the fundamentals; it's in a good zone. If it was on its highs, different story for me. But where it is, it's been sold down quite heavily. Not in a bad area. Let me just get those pictures back up there, Michael. So I'm guessing you're talking about that. Okay. This price action, I would call a long. Yep. Because the overall trend you can see is up, and we, you know, like I said, that goes back to our MAs. Nice green color. That goes back to our MAs and what we're looking. The MAs are high. We've got a 20 and 50. The 50 is going up. The 20 is above it, going up as well. So the market, to me, this is just in pullback mode. So we get that a lot. Yeah, if that we get this type of price action a lot. Whether it's I don't care whether it's a weekly chart or a daily. That price action on a weekly could be higher, or a daily, but the MAs are still high. You get that contraction lower. So we're looking for a long somewhere. It's just to keep an eye on. Sometimes they wash out and then get that another high low on the other side. A lot of times after, yeah, it's pretty much a washout. And this is what I guess I'm trying to get out. That roll over there, it could bring in shorts. I mean, who knows at this stage? If we're taking it at this stage here, at this point here, who knows what's going to happen? But for me, I'm not looking for a short, because in context of this move higher, this is contraction. It's not a trend lower. I'm trying to get into the start of a trend. So if I was looking at selling, I'm not, because this trend hasn't broken until we get through this, say, this support zone here. You get a rollover, then we pop back up, build a lower high and go. That's where I want to get into a trade. When after that trend is broken. Now this trend hasn't broken, because in context to this anchor, this leg higher, it's still in play. Longs are still in force. And what you get here, this is, I guess what I'm trying to tell you is that these little washouts here can be a very good heads up to another strong leg higher, because what it's doing is getting people it's getting people off the sidelines into the market, and it's getting that fuel. So people might have been going short, or it's putting people on the side. Any long positions that are boarded up here, that it's there you go. Okay, if it goes below here, I'm going to get out. Okay, sell stop, get out of position, and then you see it pop back up. So there's what it is putting fuel, people on the sidelines for fuel to get back in, and that's when you start getting this little higher low, pop through here, and away we go. And then if it doesn't attack that high, then you've got to change your premise. But that is a continuation trade just here on the other side of a washout. Great little heads up to an entry long in respect to that. Now, I got sidetracked once again. Beautiful, Michael. That's good. Yeah, that's a good question. I didn't quite explain it well, but this is pretty much exactly along the same line. So your context, or my context here, this is a daily chart. You can see, okay, we've had a push up here, taken out what I would consider as the anchor. You can see a bit of a washout here. You can see that little washout just over the left-hand side. Took out the minor high, then capitulated again. Pushed up, made a lower high, pushed back down, pushed up. Didn't, and still holding. So that at that stage, still holding the trend just here at this little level here. Pushed back up, made a higher low, and you go, okay, heads up for any shorts. Getting a bit nervous, and it's pushed up through this key level. Okay, at this stage here, what I would probably be looking for is an entry long, because you know your trend is starting to change. It could be going high, you don't know, but I'm going to take a chance. I want to see that price action. Okay, we've got a little higher low in here, break through here. I'm going long, and it turned out really well. So what you're starting to get is that trend down, it's broken, and we're starting to head higher again. That pullback, a little anchor down here at 50.50 it turned out to be. Anchor for that trend higher. So last leg up, if you can see, 1, 2, 3, 3 legs higher. So anyone that's going short is probably looking at it going, oh, look, we've had 3 legs higher. You know, A, B, C, however you're looking at it, I don't know. We're looking for a good short, and it's had a push down here. And then you've come down. The key thing for this was that you made that major lower high. All right, and this is what would have caught it. And then you've taken out this low here. But just remember, we're still always talking in context of that leg higher. Until this 50-50 is broken, for me, the trend is still higher. And that's what you've just got to, and this is where price action can be not tricky, but you've just got to have your anchors in play. You've got to do your prep work. You've got to know what your key levels are. And in this respect, we've got that lower high, but this is just major contraction low. And we touched down at 50-50 and then reversed. So you can just imagine people selling it in here. We've touched down a support. That overall trend is still higher. So you can just imagine there's some selling coming in here because of that lower high, looking like it's going to roll over, and then they got squeezed. And great little entry. That zone there is a great example of a short squeeze. And I think we were talking about this back at that time. So just be careful when it looks like it could get head south, especially after that big smashing down and it bounced back up, and you would have been getting people just remembering what happened. We had that push down to 50-50, nervous to get, oh, look, I've got some profit sitting on the sidelines. Maybe I want to get out. And they're starting to sell, and then all of a sudden it's reversed on them. You've got a clear risk down below that little 52.75 for a breakout here, and then you're just sort of following it higher. And then you've got that continuation trade, and it's pretty clear in this zone. So this is what we've discussed previously. It's trying to get into the market in the unknown, where the outcome is not as clear, but you're taking it as a higher probability trade. That's what's going to happen. So that was a high probability trade. If you get that short squeeze, there's a high probability it's going to come up and attack that high at 5,500, which it did. Contracted off there, and then we've just popped back up through. So the next sort of key level is on the way high is 56, and we're sort of up there now at the moment. Yeah, look, anything could happen. There, Paul, with it is. But the thing is, I guess the slight difference is when you're getting markets making new highs, all-time highs, or whatever, they're just brand new highs. It's just that euphoria that kicks in. So we could have a good correction. Who knows? There's got to be a catalyst. There's something that's going to trigger it. But what could happen time and time again is, if I can just go back to that other chart, it's just people getting sucked into it, if that makes sense. You've got to, in all essence, you've got to, and this is what would have happened here. Maybe people are thinking that same thing. The Dow's, we've made new highs, got that major lower high here. The Dow's, it's coming off the highs, big sell-off. We had that trigger of the, the elections, big smashing. Everyone was prepared, but it only hit support. It hit a major level, and it really just bounced straight off there really strong. So that's why we got that short squeeze, because everyone maybe had it in their head to, okay, we're going to get that correction going into Christmas. It's going to catch people off. We're going down. We've had 1, 2, 3 legs higher, blah, 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 and it's really just taken them, and it could just be major double top in here. We don't know what's going to happen at this stage. It could head higher, pop through 5,600 and head higher, and then next year we may get a correction, but until we get our key levels breaking, it could just sucker people in and do the same thing again. Could be, yeah. That's what I think we've discussed before, Susan, is the interest rates. They could be a trigger, and it's more. That's why everyone's looking towards the what they are discussing in the meeting minutes. It's not so much we all know there's going to be a rate rise. It's about 99% factored in, easily. But yeah, Donald Trump and Ross will drive interest rates up at a faster pace. Exactly, and I think that's why they're looking at what they're going to talk about. Have they got more emphasis on inflation? Is inflation going to get out of control in the US? Okay, interest rate rises, and if that's the case, generally they cap the market, but it's also so that coming from a low interest rate environment to a high interest rate environment potentially, it's going to be. I mean, the US dollar you'd expect is going to appreciate longer term, because it's more conducive to hold US dollars. I mean, correct me if I'm wrong. This is where I tend to be flawed in my fundamental analysis, but generally higher interest rates if you're a major investor, all right. So holding in US dollars is more, you're getting a more bang for your buck. So if you've got a major fund, just going globally, going into that major, okay, it's a big, they've invested in China, they're pulling out of China, I don't know. But now they're looking, okay, where are we going to get bang for our buck? If we're holding US dollars, okay, rather than holding euro, if they're heading, they think that coming out of the euro region into the US, they're getting more interest, they're getting more bang for their buck holding it in US dollars. So what do they do when they've got it in US dollars? Probably invest into the stock market. You want to do something with it while you're getting that discussion tonight. Yeah, you're getting while you're getting a return on the interest rate differential on the maybe Euro US or Aussie US, whatever it may be. Maybe while you're holding in US dollars, why not buy some US stocks because they're looking good. People, a bit of euphoria jumping into the market, so it could push the stock market higher. It's just going to be interesting to see how it plays out. But the fact is, the market's just been going high, so we're on all-time highs. So really, if we start seeing that lower high build, it's always going to be in context of an anchor. It could sucker in people as long as we hold that anchor chart, that anchor level on our base chart, whether it's a weekly or a daily. It could just wash people out and start heading higher again. We don't know, but if you get this type of price action, remembering our anchors are these levels, this type of price action, anchors here now, major high low, even if a major retest down here, then if you break this level, okay, then we could be in for a more major correction, and then you'd want to be selling into a minor lower high again. Does that make sense? So it's always got context, any of this sort of stuff. But yeah, I'm thinking this Fed rates could be a trigger. It's going to be interesting to see how the market takes it. I think a lot of people were caught wrong when we had the elections anyway. That major sell-off in the election, then turn around and bang, straight back up again. Yeah, profit taking. Well, that's probably the key. And it's if we're coming, out of this scenario, we've had a bit of a correction with interest rates, and then we're looking that could go higher. The problem is we're sort of at this stage at the moment, we're on new highs. So you'd expect to be profit taking. It's just whether we get this scenario where it's hard profit take, or just that controlled profit taking maybe, or it's just this bang, 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 and then taken out of the anchor level. So it's all got to be in context to an anchor level on a chart. But there's definitely some catalysts out there that could really trigger this, trigger a decent sell-off next year. But then again, just remember that it's that key thing about if everyone knows the news, are they going to be positioned that way? So everyone's sort of expecting the sell-off. Half the time it doesn't happen. You get that rollover, and then you get caught when they get, short traders can get caught. So, and that's where you're going to get a beautiful short squeeze if we get this type of price action. Does that make sense? So this scenario is different to this scenario, especially once it breaks the anchor, and then you get that lower where it's getting overextended. Like my stochastics I look at are getting extended up here, price is really failing to make new highs, and then it starts rolling over there. You're right, Paul. Either way, I mean, for me, I just see it as an opportunity. There's always opportunity in euphoria like that, whether it's people are just getting negative, they're expecting that big sell-off. There could be opportunity coming out the other side when people are, don't forget, people always remember what's happened just recently. They sort of forget, um, they're always, so anyone sold into here and it's popped up just before we get that short squeeze, say on the ASX, it's just remembering that, what's happened in the election, that good sell-off here, it's popped back up, it's another good selling opportunity, then bang, they get caught out. So people have got, short-term memories. You've always got to look back onto your chart. Well, this is where I do anyway. Look back into my charts, see what's happening longer term, see whether, you know, remember all that negativity is really just holding up the daily trend at this stage at 50-50. So just remembering the bigger picture, I guess. That was a good little discussion there, guys. I do think there's going to be a trigger sooner or later, or it's going to come out of left field. So I'm always looking to my charts, looking at the longer term charts. Has it broken the anchor level? When it breaks the anchor level, for me, that's a heads up. And I'm starting to see a few of our, at the moment, I think on our alerts, we're up about 8 positions. So if they start getting stopped out, okay, something's not happening. You're starting to see some stocks rolling over, getting stopped out, whether they're stopped out for a profit or a small loss. Either way, things are starting to move south a bit, and we might have the overall market heading south. So it's just then I always revert back to the longer term charts. What's happening? What's going on? And we're getting up, and we could get up to this bit of a washout to the top side, because anyone that's going long doesn't want to miss out. They've missed out through here. They've missed out through here. Okay, we'll buy if it gets through 5,600, and it could just wash that out. And this is where we're talking about washout as opposed to, um, a short squeeze. It may just pop up through 56, pull back, make that major lower high, and retest 56, and then bang, off we go. Yeah, but the DAX, and actually we get that up because I see those as some really good. I just want to get those charts up. The DAX has broken some key levels. They did pull back last night. They've had a good run up the last few days. It could just be a bit of profit taken the last few days. Just look at the longer term chart. This is why it's always good to reference. It's always, anyone who trades has always got a point of reference. You always have to have a point of reference. It's a 1 minute chart. That's no good. Go back to a daily. See this here on the daily? That to me is not, the market's not heading south. That's more of a strong move. See that consolidation through here? It's breaking that downtrend here. That's an ideal type of price action. Of course, when you get this extended move up, that stellar run, yeah. This move up, you've got to, you probably have to. I mean, you don't have to. Don't get me wrong. That there is going to bring you some selling. When you start getting extended, and look where the way I look at stochastics, it's overbought. That potentially could mean that that's getting extended. The probability of that going high is getting lower. Nothing to say it's not going higher. That's where at this stage, if I want to enter short, I have to enter short. For me, I'd have to go off a lower high. Okay, but then I don't know where it's going to go to, and because the overall trend for me, that's looking quite good. All right. In context of this, I've had a leg up, roll over, strong push higher to new highs on the DAX, made lower highs, but really it hasn't broken this major level at 86.41, and it's come off, touched down, made a higher low, sort of broken that trend line down. That's just a key indicator. Well, a bit of a heads up what's going on here, and then you've got that consolidation through here. It's tried to make some lows, but it keeps touching up on this. A higher low in here. MAs are heading higher. And it's just a beautiful little long trade, really. So for me, where's that going to go? You've obviously got first stop 11,430, and then if it gets up through here, it's probably going to pull back, make a higher low on a longer daily basis, and then push back up towards, maybe up to test at 12,350. So the DAX for me could have a lot to run. Any major shorts in here, or anyone that's been waiting for a long play, might be looking in here, maybe buying it into this zone and looking for it to push high. But it's just those last few days that are probably going to use a bit of heat's got to be taken out of that market. Does that make sense there on the DAX? Continuous. So that what I would more expect here is maybe that type of price action. But that, don't forget, that's all contractive price action. that's all contractive price action with respect to this move. So you've had a let's just take this one step further. Here we go. So that's a leg up. All right, come on. That's a leg higher up here because you've broken these key anchor levels and it's contracted. You know, we've had this push down here, then we've had another leg up. Okay, we're headbutting up towards the resistance around that 10,823. It's contracted, and it's contracted. We know that because it's taken out a few of these lows. If that was a strong market, it should have gone, okay, pull back, pop back up through here, but it didn't. It roll over, took out some of these lows, took out it again, pushed up, built a higher low, and it's popped back up through there. So as soon as you get that push up through here, it's really this continuation that we're seeing another leg. So if we can actually draw that. So projecting up, it could take us right up to sort of that, you know, through there, 11,750, 740. All right, so of course, this leg up, like any leg, has got to contract, you know, higher highs, higher lows. So we may have a bit of contraction like this and then push up, or we just contract slight, you know, slight contraction, then go bang, away we go. Does that make sense? But definitely, I'm looking at this as a bit of a good run high. Just be interested to see where it goes. So this, the DAX could be, I think, is heading higher. That, you know, we've got the Dow, the S&P into new highs. Our market's looking quite good for a break of 56. There's all these sorts of markets that they're starting to push higher. So this is where people who would anticipate a bit of a rollover never anticipate a trade, for example. Just always wait till you're confirmed. Wait to see your charts set up. Wait to see failure of highs, new highs, whatever. Wait for indicators to tell you when the market could be rolling over. Does that make sense? That's a good question there, Susan. Yes, pretty much. You know, give or take, that move up there is pretty much the same distance as this secondary leg high. And if we just project that up, we've sort of got a zone, like I said, just up here. We could fall short because we've got a good resistance zone up here. But if you see that push up to here and they can start contracting, I would expect to see a fourth leg. And that could take us back up to what those highs, I think it was. See, that's not even all-time highs. No, it is the all-time highs. We could get a push up. We take out this sort of resistance zone here, pull back, and then you get that fourth leg high, which could take us up and through into new all-time highs on the DAX. It's interesting at the moment. We've got a few catalysts that we could see a sell-off, but the markets are not looking like that. Technically, they're looking quite strong. I mean, the DAX is looking quite good. We know what the S&P and the Dow are doing. It's going to the highs. Oh, that length of that move is 10,050. Oh, actually, let's take this one up here. 91.50 up to 10,825. Say 850. 91.50. It's about. That's a lot, isn't it? That's about 1,700 points, isn't it? Yeah, 1,700 points. So 1,700 points up here. So we've still got a bit to go. Either way, if that's the case, if we're going to hold this trend higher. All right, does that make sense there, guys? We've just gone over time a bit there, but I guess we haven't got time just to chat about individual stocks. But we'll talk about those tomorrow. Maybe we have a bigger day on individual stocks, but it's going to be interesting to see how the market reacts tonight. I'm pretty sure the meeting, either the announcement tonight and the meeting, the minutes might be out later tonight or they're out tomorrow. Let's just take a quick look anyway. Again, we go back to our Forex calendar. It's Wednesday night, isn't it? So Wednesday night their time. FOMC projection statement, funds rate, press conference. So that's all, tomorrow night. So it's Wednesday night US time. So another day up our sleeve anyway. Friday night, is that the Fed? No. Yeah, so okay, they'll be talking about it tomorrow night. But either way, it's going to look exciting. It's going to be exciting. Yeah, exactly. there's going to probably be no reaction to a rate rise. It's more, and this is a hard thing because we don't know what they're saying. I mean, the big boys have they got the tabs on the news. They pretty much sit there and listen to it. I mean, I don't sit there and listen to it anyway, but I'm just looking for the headlines to pop up. But pretty much you're going to see it in the market. If they're really talking up inflation for next year, you probably get that sell off and profit taking coming to the market, especially at all time highs, this, that, and the other. But it's where we go to from there. Have a bit of is it going to be a correction or is it going to be a major sell off? I mean, who knows? But either way, keep an eye on your charts. We'll discuss that more when we talk about this. That's Wednesday night, Thursday. We'll have a chat about it on Thursday. Just see the wash up on Thursday. Anyway, thanks for joining us, guys. Good to see you all in there, and we'll be back here at 12:30 tomorrow, Melbourne or Sydney time, and we'll have another discussion then and see we'll send out an alert around the 11 o'clock, 11:30 mark to discussion topics. If you've got any topics you want to cover and you're thinking about something, just send it through to support@tradesetup.com.au. All right, cheers, Paul. Thanks, Susan. Thanks, Michael. Thanks for the comments. It was a good little discussion here. I think it's always good to hear other people's opinions and what's going on. All right, we'll chat to you tomorrow. Cheers, guys. Bye.